Midcap earnings, I want to talk to you about Midcap IT specifically. So let me just quickly recap the numbers. Because what's happened is that this is a bit of a new blow, so to speak, for the market. Till now, one could always make the argument that the weakness was restricted to large cap IT, and you had players like Persistent, Coforge that were doing well. So just a quick recap of what has happened. Look at the cuts in terms of the weekly loss in these stocks. Persistent 6.5%, Coforge about 10%, Hexaware 12%, Emphasis 7%. Mastech has been flat. Now, what have the companies said? Is the market getting too pessimistic, or is it a real issue? I've just picked up some examples. So Persistent, actually, top-line growth 3.3% is better than what most are doing. Their margins were steady. The commentary was very positive, saying that the order book and the pipeline is healthy. They're targeting 19% CAGR growth over the next 2 years. But what was the problem? The market just focused on the hit. And what was the hit? That they've deferred the wage hike. They've called out weak macro environment. So that was Persistent. Coforge, 8% constant currency growth. Promise of 14% EBIT margins by the time you exit this year. But the market is just not in the mood for any misses. The miss here was that adjusted margins in the quarter were weak. And of course, that issue of capital allocation and whether they're putting too much money into building data centers. That became the focal point for the stock. Hexaware, here, of course, there was a issue of growth. Top-line growth was below estimates. Margins were under pressure. The company itself has toned down its expectations from the whole year. They're not as optimistic as they were at the start of the year. And they're acknowledging that. Emphasis, only 1% constant currency growth. Clearly not enough to inspire any confidence in the market. And finally, Mastech. The revenue itself is down about 1%. And Mastech actually is one company that's clearly called out the weakness in IT spends, particularly in sectors like, ramp down of a client in healthcare, weakness in retail in particular. And then if you round it off with, of course, Infosys actually was best in class. That top-line growth was better than any of the other large companies at 2.6%. They increased their guidance. It's still only 1 to 3%, but for whatever it is worth, it's up. And even the commentary, they said they're getting good traction across BFSI in North America. They're seeing new possibility of revenue streams in AI. None of that was enough for the market. The stock ends 4% lower.